Developing tonight, the roller coaster on Wall Street. The stock market tumbled right from the opening bell with seconds. The Dow Jones Industrial Average was down more than 500 points, but minutes later, it was back up by triple digits. Nice rebound. So here's how the stocks look right now. You can see that the Dow ended the day up 567 points. But yesterday, the Dow Jones Industrial Average posted its biggest percentage drop in more than 6 years, which has many wondering about where their finances stand right now. We are joined now by Sean Snaith, Director for the Institute for Economic Competitiveness at the College of Business Administration at UCF. That is a mouthful.
Well done.
There's a lot going on. All right, so we got a good jobs report. Yeah. Everything's looking good. Wages are up.
Right.
What happened?
Well, I think it was that jobs report that sort of spooked the markets, because what we saw in that jobs report was not anything negative about the economy or the labor market, but that wage growth had started to accelerate. And that started to trigger, I think, people worrying about inflation starting to rise at a more rapid pace than we've seen, which in turn would mean that the Federal Reserve would have to raise interest rates faster than markets were expecting. And that just, I think that was the trigger that set this all in motion.
But then today we're up 560 points. So what happened to all those worries?
Well, you know, emotions and psychology are things that can be fleeting. And so, you know, if this kind of news upsets you, it's probably best not to log into your 401k.
Right. It's not for the weak.
No, it's not for the weak.
This is just part of the deal, right? It's, you know, people yesterday were logging in freaking out. You know, sure. That's, what do you say to those people?
Don't log in. I mean, if you're going to freak out with these kind of movements in the market on a day-to-day basis, then for your own mental health, stay away from the computer.
Yes.
You need to look at the longer run.
Sure. And people were talking about, you know, it was such a big drop. But the market had not been volatile. It has been very steady for the past 18 months or so. So is this a natural correction that we just saw?
Yeah, I think we got a little complacent with the past year or so, the stock market just setting new record after new record, and then suddenly it was going in the opposite direction. And so I thought that maybe was more frightening because we just hadn't experienced that for some time.
Yeah, how would you compare this to what we saw in 2008?
Not even close.
Yeah.
You know, this is nothing close. We don't have the same sort of broad-based economic and financial crisis happening. In fact, other than that jobs report, there's not much to be afraid of right now as far as the economy is concerned.
So what can we expect moving forward? I mean, should we expect more volatility like this, these 500, 600-point swings every day?
Well, probably not every day, but I mean, you can expect volatility. I mean, that's financial markets, and markets sometimes over-respond to information, and sometimes psychology plays a role. So, you know, I would expect more volatility, but not necessarily every day and on the level that we've seen over these past couple of years.
But is this also an opportunity for people who might be looking to get into a little something to maybe invest?
Well, sure. You know, every dip is a buying opportunity. I think most brokers will tell you that. So, you know, the thing is, I think this is to focus on the long term, and, you know, you should be investing on a regular basis. And over time, if you look at what the stock market and how it's performed, the returns are safe despite, you know, many of the ups and downs that happen.
Sure. Keep calm and invest on.
Yes.
Yes. Unless you need the money within the next year.
In which case, you probably
yes.
shouldn't be exposed to the stock market
Yeah.
like that, because if that was this semester's tuition you had in the stock market, then you got a problem.
Yeah.
Right.
All right, Sean Snaith, very nice to see you. Thank you so
Yes.
much for
Thank
joining
you.
us today.
Bye-bye.